Hi everyone, I am Mrs. Nagajothi, Assistant Professor, Department of Commerce, Anne Hajra Women's College, Manapali. We are going to learn about the holding company accounts. The topics covered are introduction, capital and revenue profit, cost of control or goodwill, capital reserve. What do you mean by holding company? A holding company is one that holds the whole of the share capital or the majority of the shares in one or more companies to have a controlling interest in such a companies. So, holding means the majority of the shares of another company is held by the one company is called the holding company and the another company is called the subsidiary company. It should be explained in the definition as per accounting standards 21. A subsidiary company is treated as a subsidiary company is an enterprise that is controlled by another enterprise known as parent. So, subsidiary is another company and the parent is the holding company. So what are the main objectives of holding company? To eliminate the competition of the same line of companies, utilize the available resources to improve market share, to enjoy economies of large scale of production and efficient management, to get concession of income tax and utilize one holding company. So the main objective is to enlarge the business, to enlarge the marketing shares and also that avoid the income tax. So these are the main objectives of preparing the holding companies. What are the important terms? That is capital profit, revenue profit, minority interest, cost of control or goodwill, capital reserve. So the important terms, what do you mean by capital profit? The pre-acquisition. So I already told A company is a holding company, B company is a subsidiary company. A company holds 60% shares of the B company, that is a subsidiary company. So at the date, during the particular date, due to particular date, that is at that date, the profit held by the subsidiary company is called the capital profit, and the remaining period after holding the shares of the holding company, the subsidiary company's profit is treated as a revenue profit. So, what do you mean by minority interest? Minority interest means the paid up value capital shares paid by the outsiders are the proportionate shares of reserves and profit and loss. What is minority interest? So, I already told a subsidiary company, majority of the shares are held by the holding company, that is 60% to the holding company, remaining 40% is treated as a minority interest. If the holding company pays more than if the investment made by the holding company to the subsidiary company is greater than that is actual worth, it is called as a goodwill. If it is less amount, it is to be treated as a capital reserve. So the problem for finding out the calculation of capital and revenue profit. So how you should calculate? Because here the problem it shows X limited is a 60% X limited and Y limited. X limited is a holding company and Y limited is a subsidiary company to holds 60% of the shares. So we are going to calculate the capital profit and the revenue profit because at the time of purchase, you have to notify the time of purchase date, that is 1/1/2020. Here it should be treated as capital profit, and the remaining profit, here the whole total profit is given, the remaining period is called the revenue profit. And also the amount of investment made by the holding company, investment made by the holding company to the subsidiary company by comparing the actual worth of the subsidiary company, that is the face value shares, and also the capital profit is included, that is called as the capital profit. So the debit balance, sometimes it may yield a loss, that should be treated as a it should be treated as a loss to the company. Okay, so hope you understand the topic of the holding company by finding out the holding company and the holding company's capital profit, revenue profit, minority interest, and the goodwill. Okay. Thank you.